Want to know the secret to long-term wealth? Well, I have some amazing news for you. In this video, I will reveal 5 top stocks recommended by the legendary Warren Buffett himself, giving you a glimpse into his investing genius and helping you pave your own path to financial success. If you're anything like me, you've probably always wondered what makes Warren Buffett one of the most successful investors in history. Well, today is your lucky day because I'm going to share with you some golden nuggets of wisdom from the Oracle of Omaha himself. By the end of this video, you'll have a clear understanding of why these 5 stocks are on Warren Buffett's radar and how they can potentially elevate your portfolio for long-term wealth creation. So let's dive right in and uncover the next big winners that even Warren Buffett believes in. Long-term investing is more than just a strategy. It's a mindset that focuses on holding onto quality stocks for extended periods, allowing them to compound and grow significantly over time. Warren Buffett, often referred to as the Oracle of Omaha, has mastered this approach. His philosophy centers around acquiring pieces of exceptional businesses at advantageous prices and then patiently holding on to them, sometimes for decades. But remember, not all stocks are created equal. Some have the potential to outperform the rest, and that's what we're here to uncover. So let's explore the 5 stocks that hold the promise of turning a decade of patient holding into prosperous gains. Stock number 1, Alphabet. In our quest for potentially prosperous long-term investments, we can't overlook Alphabet, the parent company of Google. This tech titan has solidified its reputation as a valuable and top-performing entity in the business world, making it a prime candidate for your investment portfolio. Alphabet's financial performance is nothing short of impressive, consistently raking in annual revenues well beyond the $200 billion mark. To put this into perspective, that's more than GDP of many countries combined. With a market capitalization soaring over $1.3 trillion, Alphabet cements itself as one of the most valuable corporations globally, marking it as an undeniable heavyweight in the tech industry. But what truly sets Alphabet apart is its diversified revenue streams, safeguarding its resilience in the face of market volatility. Beyond its foundational search and advertising ventures, Alphabet has strategically expanded into burgeoning sectors like cloud computing and gaming. With substantial investments in cloud services, especially Google Cloud, Alphabet remains at the forefront of an industry projected to grow at a compound annual growth rate of over 15% in the coming years. Transitioning from software to hardware, Alphabet's hardware endeavors, including the Surface line of tablets and laptops, have significantly contributed to its success. The more personal computing segment, encompassing the Surface line, registered a remarkable 6% increase in revenue, reflecting Alphabet's versatility in excelling across multiple sectors. And if you're seeking stability, Alphabet delivers on that front too. With a consistent dividend-paying track record since 2003, Alphabet isn't just about growth, it's about reliability. Stock number 2, Johnson & Johnson. Johnson & Johnson, a leading healthcare company, commands a prominent position in the market. What makes it a standout choice for long-term investors is its remarkable portfolio diversity. From pharmaceuticals to medical devices and consumer health products, J&J has strategically positioned itself to capture a broad spectrum of healthcare needs, making it a resilient contender in the ever-evolving industry. Innovation has been woven into the very fabric of Johnson & Johnson's journey. The very trait has been instrumental in amassing a massive and loyal customer base. With a storied history of pioneering advancements, J&J stands as a testament to the enduring power of innovation in shaping a company's success. As populations age, the demand for medical products skyrockets. The phenomenon is a crucial factor that plays into J&J's long-term potential. The company is uniquely poised to cater to this demand, considering its diverse offerings and comprehensive solutions that address the varied healthcare needs of aging individuals. Investors, take note, MedTech could be the X factor for Johnson & Johnson. A notable instance is the Biomed acquisition, which adds a significant boost to J&J's MedTech business, with the potential for high-growth segments contributing over $1 billion in annual sales. Biomed is expected to positively impact sales growth by close to 100 basis points this year. What about dividends? Johnson & Johnson has not only consistently paid dividends for 60 years, but it has also grown them. In uncertain times, the resilience of J&J's dividend becomes evident. With a yield of nearly 3% at the current price point, investors can reap the benefits of a dividend yield that's significantly higher than the norm, making J&J an attractive proposition. Stock number 3, Visa. Visa isn't just a company, it's a global payments technology powerhouse. With a presence spanning over 100 countries and territories, Visa facilitates seamless transactions across borders and cultures. When it comes to financial strength, Visa is a titan. Its strong financial results speak volumes. In the fiscal year 2020, Visa's net revenue reached a staggering $23 billion, showcasing a remarkable 7% increase from the previous year. But that's not all. The company's net income surged by 5% to $12.1 billion, and its earnings per share saw an impressive increase of 7%. That totals 5.10. These figures are a testament to Visa's ability to generate consistent revenue and profit growth. Let's talk numbers. Visa's dominance in the global digital payment market is a key factor driving its success. Holding a commanding 50% market share in the US and an even more impressive 60% market share in Europe, Visa's network effects create a significant barrier to entry for competitors. The more participants join its network, the more valuable it becomes. But Visa's strength isn't just in numbers, it's in diversity. The company boasts a diversified revenue stream that shields it from dependence on any single market or product. Revenue generation comes from various avenues, including transactions, data processing, and international transaction fees. Additionally, Visa's foray into digital payment solutions like Visa Checkout and Visa Direct has opened up new avenues for revenue growth. Speaking of leadership, Visa's prowess in providing digital payment solutions is unparalleled. Its innovative approach and ability to adapt to changing consumer behaviors have made it a go-to choice for millions worldwide. Visa's strong management team, led by CEO Al Kelly since 2016, has proven its mettle. Under his guidance, Visa has expanded its digital payment solutions and made strategic acquisitions, enhancing its capabilities and bolstering its growth potential. Stock number 4, Amazon. Warren Buffett once wisely said that investing in publicly traded segments can provide opportunities to buy pieces of wonderful businesses at excellent prices. This principle resonates well with Amazon. Amazon's dominance in the e-commerce industry is unparalleled, with a massive 37% market share. Its ability to meet customer needs and innovate quickly has propelled it to the forefront. But Amazon isn't stopping there. It's consistently expanding into new markets and industries. A driving force behind Amazon's success is Amazon Web Services, its cloud computing division. AWS has become a major growth driver, serving as a backbone for numerous online services and platforms. With companies increasingly relying on cloud technology, AWS's significance cannot be overstated. Diversification is one of Amazon's strengths, with businesses extending beyond e-commerce. Streaming services and advertising are rapidly growing segments that add to the company's robust revenue streams. Innovation is ingrained in Amazon's DNA, constantly pushing boundaries to enhance products and services. This innovation gives Amazon a competitive edge, enabling it to stay ahead of the curve and maintaining its dominance in the e-commerce industry. Amazon's financial performance is equally impressive. In 2022, its net sales surged to a remarkable $121 billion, an 84% improvement from the previous year. The e-commerce industry's potential for long-term growth is vast, and Amazon is at the forefront of this expansion. Its relentless pursuit of innovation, diversified revenue streams, and strong financial performance position it as a compelling option for long-term investors. Stock number 5, Microsoft. Microsoft's financial prowess is nothing short of remarkable, with a revenue of over $143 billion reported in the fiscal year of 2020. The company has demonstrated an impressive increase of 14% from the previous year. Not to be outdone, Microsoft's net income also surged to be staggering $44.281 billion, showcasing a 13% growth from the previous year. At the forefront of Microsoft's success lies its groundbreaking role in cloud computing. The Azure platform, Microsoft's cloud computing solution, has secured its place as the second largest cloud platform globally, trailing only behind Amazon Web Services. In the fiscal year 2020, Microsoft's Intelligent Cloud segment, which includes Azure, reported an outstanding revenue of $48.365 billion, demonstrating a remarkable 17% increase from the previous year. Microsoft's influence isn't confined to cloud computing alone. the company is a significant player in the multi-billion-dollar gaming industry. In the fiscal year of 2020, Microsoft's gaming segment reported revenue of $11.594 billion, signifying a 2% increase from the previous year. Further solidifying its presence in the gaming world, Microsoft's strategic acquisition of ZeniMax Media, the parent company of game developer Bethesda Softworks, is poised to reinforce its position in this ever-expanding industry, promising even more growth potential. Microsoft's prowess extends beyond software into the hardware market. The company's hardware ventures, including the popular Surface line of tablets and laptops, have been warmly received by consumers. In the fiscal year of 2020, Microsoft's more personal computing segment, which includes Surface, reported revenue of $48.258 billion, showcasing a commendable 6% increase from the previous year. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.